information discussed on Talkin' Money with Jeff Tarbell is believed to be from reliable sources. However, no responsibility is assumed for inaccuracies. No statement made on this broadcast should be construed as a specific recommendation of a particular investment product. Views expressed are those of the speakers and do not necessarily represent those of CBS Radio. Use only as directed.
Smiles, everyone. Smiles. And prepare yourself for...
Show me the money!
Ladies and gentlemen, the radio broadcast experience designed to keep your wallet in top condition. It's Talkin' Money with Jeff Tarbell.
Talkin' money. Talkin' money. More money, more money, more money.
And now entering the studio, your guru for fiscal fitness, Jeff Tarbell.
Right. You got to push the button there, Richard.
That's right.
I can't hear in my left ear or out of my left ear. And anyway, and I'm now getting a weird buzzing sound, too. This is all coming apart. We should just do this by walkie-talkie. How are you doing?
I thought we did do it by walkie-talkie.
Are you hearing that?
Yes. No, I don't hear you buzzing.
You don't hear buzzing?
Must be your high-end headphones.
Wait, just stop. Oh, it is my... Oh. It's John's headphones? What do you mean it's John's headphones? Oh, okay, so it's your headphones there. You better switch them out. Here's another. Turn it the volume
How
a little
about this? Check.
No, that's not it.
Hello?
Well, let me try it here, too. No. Oh, you're right, Chris. It is a lot better with John's microphone off. It is your headphones. Here, there's another pair down there. Try those. That's weird. I haven't heard that before.
It's the way this sits in there.
Now, see, they're unplugged. Okay, we're gonna move John around. I apologize. We should have all this worked out in advance, but we don't turn the microphones on live. Which there's nobody here in the morning. There is? I thought I was the only one that showed up in the microphone. Here we're gonna do this. Oh, see, there you go. We got it now. This is like junior radio at your college level. Actually, it's probably a step below that. This is Talkin' Money. How you doing? There you go. Now I can hear. I feel like I'm being electrocuted. We start every show the same way. Let me give out some phone numbers real quick. We're going to have some quiz questions for you today. 339-1140, 1-800-920-1140. And the Metro PCS text line is 44-1140. And keep in mind, if you're just texting me stuff to ask a question, no problem. If you are texting to win something and you want a prize, you need to text in your own phone number, your name and phone number as well, so we can call you back. Because under this new system, it doesn't give us your phone number anymore. It just gives us a couple digits. So if you want to go that route, you can text in your name and number, and we'll give you a call back and get your address if you want to win some stuff today. We can do that as well. So, Chris, what's happening in your world there? You got all your Red Sox gear on. You got all your Red Sox stuff going. Your team is doing okay?
They're all right now.
They're all right. Okay. The A's didn't make it. That was kind of a bummer.
Yeah, we're really hoping for. I wanted to see the Red Sox in the ALCS, so that's not going to happen.
Yeah,
unless
okay.
I go to Detroit or Boston.
That's it. So what's happening in your world, eh?
Besides all that, I saw last week probably one of the most amazing movies out there, and I need everyone to see it. It's Gravity, and you have to go see it in IMAX 3D. It's probably one of the most amazing things I've ever seen. I mean, it's one of those movies where if you don't see it at IMAX and you see it in 2D at a movie theater, you're going to say, this is a terrible movie. This is amazing. I haven't ever seen anything like it.
Is that the one with Sandra Bullock?
Sandra Bullock and...
See, that movie looks stupid.
What?
It looks stupid.
No, I thought it was going to be stupid. Then on Twitter, everyone's like, you got to see it. I went and saw it. It was absolutely incredible.
So you're telling me like the visual was incredible, or just the story, or Sandra made you cry? Which one was it?
Like, it looks like they're in space.
Okay.
I've never seen anything like it where it actually looks like they are in space.
Okay. So we'll see. No soccer out of Chris today. It's all about Gravity.
It's international, so there's no games today.
Okay. I knew we'd get soccer out of there somehow or another. Are you okay over there?
This is horrible. I can hear out of one ear now.
You look like you're in the kid's seat. First of all, John is not the tallest individual I've ever met. Now you put him in a small seat. You look like you're going to eat your Cheerios out of your cup there in a minute. Okay. How you doing down there, Loopy? Hey, if we can't have fun here, the pay is not so great, so we have to at least have a good time. So he's okay down there. The little boy's going to do some quizzes in a little bit. Halloween's next week, young man. You'll be fine.
That's right.
So we're going to be radio guys for Halloween. So how are you doing? What's happening in your world there?
Just feeling a little short. Just a little short.
Other than sitting on the
Not much. It was a weird, I don't know. I'm trying to figure out what happened this week. Just, I think the delay of the feds and things just kind of working their way through. I don't know if people are hesitant, if they're unaffected, or what's really going on. But
yeah, I can't tell if people don't give a damn. But if you're not getting your paycheck right now, you probably do. But they told you you're going to get your paycheck. And here's the part where I think is always interesting: is how many people can go, even though they know they're going to get paid. How long can you go without getting paid? And we've always contend on the show. You probably should have 6 months to a year of pay reserves around.
Right.
Nobody does for the most part. And I'm not saying you should sit on a bunch of cash because that doesn't do anything for you either. But yeah, it'd be interesting to see how many people can actually afford to not get paid until this resolves. And how are we on, 10 or 11 days now? How far are we?
Today might be 12.
Today might be day 12.
I'm guessing.
So, yeah, the market, if you're watching, I don't necessarily watch the stock market. I catch, blurbs that come across Market Watch and things. But I do watch, and we follow, obviously, John and I follow the interest rates, which follow off the bond market, which, in fact, tends to mirror something in the stock market a little bit.
It used to a lot more, but
every little bit of,
not anymore.
Every little bit of news this week, yes, every little bit of news this week, you would think, okay, they're going to resolve it, and then stocks run up a little bit, and the bonds come back down. Oh, never mind, they walked out of there yelling and screaming at one another. Rates got a little better. Stocks came down. And you finally you got to say, forget it. I mean, it's going to be what it's going to be.
Yeah.
Now, rates are still very, very good, I mean, compared to where they were even a month ago. So that's helped a little bit. It does seem to be picking up a little bit of activity before the holidays for some home buyers, too. So we'll talk about some of those things today as well. As I was listening intently to the gambling show prior to our show here today, I was just told John, look at this big article out of the review section in the Wall Street Journal in this morning's paper. It talks about gambling, and I find it. And I am not a gambler. I don't know. Do you do any gambling, Chris? You like to go to Vegas, but do you gamble when you go? You gamble when you go there?
Oh yeah.
Yeah. Okay. I thought you.
Well, gambling means you have a chance to win, so I lose when I go to Vegas.
Yeah. Well, so this is a that's a segment that the gambling houses don't want to talk about. They don't want to tell you anything, right? I mean, they're not in their benefit to tell you how things go. But what they've discovered is the Harvard School of Medicine did a huge survey, and they looked at two different gambling entities. They looked at online gambling, and they looked at the Indian gambling casinos. They were able to get more information out of there, and frankly, some of them just came forward and said, "Hey, we'll help you with your study." So it's very interesting, but if you are a one-off gambler, which I would consider myself, so you walk in, like maybe Chris goes there once a year and he walks in and he plays, one day. Your odds at that type of gambling are much, much better than John, who's online every night, or who's a heavy, heavy gambler in winter. And here's some of the numbers to think about. So on any given day, the chances of emerging a winner aren't too bad. Gamblers won money on about 30% of the days they wagered, but continuing to gamble is a bad bet. Just 11% of the players ended up in the black over a full period, and most of those pocketed less than $150. So you're walking in, your best chance is a 30% chance to win. And by the way, if you do the numbers on that with your fingers, that means you have a 70% chance of losing. So that's your best bet. And you take a look at this. Now, you talk about the term the whale. You've heard the whales, and there's even movies about them. That is a true statement. And the big losers of more than $5,000 or more outnumber big winners 128 to 1. And many casinos, if not most, 80% of the profits made in a casino are made on less than 10% of their public. So that's why these places, go so hard to get after, and offer tickets and get these guys, men and women coming in. So it's a fascinating industry, and frankly, I want to get in it. I don't think I have any even 1/8 of Indian in me, or maybe even 1/68 of Indian in me. Although I did see an Indian reservation once in North Dakota, and I think I may have even owned part one that was former. I don't know if that qualifies me or not, but I I want in. I want to start my own.
The odds are pretty good.
Yeah, the odds are pretty good. I like this. This is the last little note. Casino games are nibbling machines, and the more nibbles you have, the bigger your losses. So they just slowly take, even the penny machines, they just slowly take it from you. So there you go. Your chances of winning big, about 128-1 against you. What's your biggest win there, Chris?
Biggest win in Vegas?
Yeah, like just one weekend or one day.
One day, actually about 24 hours, I won about 1,500.
Oh, that's good.
Yeah.
It's good if you picked up and left after that.
Of course not.
Yeah, okay. He didn't say the whole weekend. He said in a 24-hour period. Hey, I mentioned or did a little posting during the week, and we were going to talk about this last week, and I didn't get to it. Looking for any of you who have had the opportunity so far to go online to healthcare.gov, which in California reroutes you to, what's the name of it? Let's see here. Is it right here? Get Covered California Healthcare Guide for Business. So if you go to basically the Obamacare site, the state of California has its own exchange, and it routes you back around here, so you don't end up on the national exchange, you end up on the state. But has anybody had a chance to do that and price one out for yourself? Because I'm dying to, I see online. I mean, obviously you see all the people that are against it. You see them. Oh, this wasn't a big deal. This wasn't a big deal. But it's hard to say whether they already had insurance and they were getting a screaming good deal, or what's going on. But if you've had a chance to go online and price that out, I'd love to hear from you. In fact, we'll take the first 3 people who can give us a call today, 339-1140, 1-800-920-1140. We'll give you some Jim Boy's tacos out of our vault, our special reserve, a coupon to Jim Boy's tacos, and one of our Taco Money drink koozies. But I'd love to hear from you, good, bad, or indifferent. I don't have an agenda here either way. I have not gone on it. I do have health care that I pay through my own company, so at the moment I don't need it. But I am curious to see, what does the pricing look like? All I have seen so far has been people talking about high deductibles and kind of lower health care, which I would call almost like I wouldn't even call it a catastrophic plan if it cuts you off at a certain level. So I just don't know whether that's working. You hear that the websites are crashing, and certainly a website can crash. Doesn't mean people are signing up. I mean, you could get 1 million people hit a website, and if you had two people sign up for it, then big deal. It's not that big a deal. But I'd love to hear from you if you've had a chance to price it out. Some people, and myself included, not real anxious about putting our name and address and social security number on there. Not like they don't know where I live already anyway. But it's like once you get on the system, are they going to keep bugging you? So I was going to do it just to run a trial so I could come on the radio and say, hey, this is what I found. And I thought, I'm not really sure I want all my information. I don't want if I want to raise my hand on that. And you hear that too. So during the break, we'll see if we can wrangle up some people who've had a chance to check it out. We'll reward you handsomely with some Jim Boy's Tacos gift certificates and some other fun stuff too. 339-1140, 1-800-920-1140, and you can tell us what you found out there too. The Sacramento Business Journal had a very easy to use diagram, and I'll just kind of read this through real quick. So if you haven't had a chance to look at it, you'll know whether you should be on there or not. And the penalties, by the way, if you don't sign up either through your own employer or on your own, are not very attractive, particularly not so much next year, but 2014. And in fact, let me give you an example. 2014 penalty is $95 per adult and $47.50 per child, or 1% of the family's gross income, whichever is greater. So if your family's making $75,000 a year, 1 point on that $750. That's a penalty. That doesn't give you any insurance. That's just your penalty. In 2015, that goes up to 2% of your income, and in 2016, it goes up to 2.5% of your income, your family income penalty for not signing up for Obamacare or having your own plan. Well, 2.5 points on $100,000 is $2,500. Now I know not all of you are making $100,000, but I'm talking about family gross income. That's a $2,500 penalty. That's $200 a month, folks, for not signing up for the program. So be aware what we voted for, what was voted in, and I guess there you have to make a decision then. Would I rather spend $2,500 on nothing, or would I rather get some sort of a policy? Now, this is what businesses are doing, and this is the unintended consequence. A business looks at you and says, I got two options. I can either move your butt down to part-time, which a lot of them are doing, or flex time, or I'll just pay a penalty. As a business owner, if the penalty is, I don't know if I have it in here. I'll look during the break and see it. The employer must pay a penalty of $3,000 annually for each full-time employee, and up to a maximum of $2,000 for each part-time employee. Minus 30. I don't know what that means. So somewhere in a couple grand. Well, I can tell you right now, as a business person, $2,000 is a hell of a lot cheaper than the current policies for health policies. So either move them down to part-time and don't give them any insurance at all, or pay the $2,000 and say you're on your own. And so that's the challenge. And this is part of the debate that's going on back east, is that, not only it's easy to say, well, how could you possibly vote against, providing health care to somebody? Well, we're also discussing whether we should be penalizing them 2.5% per year. And also, are we in fact creating a more part-time workforce, because it's just easier to move them to part-time and not pay, or pay the penalty? So there's a lot of discussion going on, but I'd love to hear from you. I'll read through some of these things and how you should or should not be covered after we come back from the break. And if you have checked it out yourself, I'd love to hear from you. You can use a fake name if you want. 339-1140, 1-800-920-1140. You can text us at the Metro PCS text line 441140. And if we take your text on the air, we'll send you out some prizes as well. Make sure you give us your name and your phone number, please, if you're texting us, if you want us to give you some sort of a prize. John's got a quiz question completely separate from all of this.
That's right. We're going sideways here. What happened 31 years ago in Chicago that most consider
Michael Jordan
was the start of tamper-proof packaging?
What?
That's the big hint. What happened 31 years ago in Chicago that many consider started the beginning of tamper-proof packaging?
The birthplace of tamper-proof packaging. Did someone die?
A few people died.
Really?
7 people.
It wasn't Jordan then. Jordan's a nice guy. 339-1140, 1-800-920-1140. You can text us at 441140. 31 years ago today, something happened in Chicago. They got some bad pizza. And something else happened, the birthplace of the tamper-proof packaging. If you know the answer to that, give us a call, shoot us a text, send us a smoke signal, or just hang out and listen. We'll be right back.
Talkin' money.
Well, alrighty then. We're back to Talkin' Money with Jeff Tarbell.
Right. How you doing?
Much better. Except I can't hear myself.
Chris, you got to turn on mic 3 there for us. You got it, John?
Hello. Check.
We're not hearing from Johnny there. Go ahead, try now.
Yeah. Hello. Check.
Yeah, it's mic. I got mic 3 on.
No, mic 4. Oh, mic 3. There we go. Check.
There you go. You got it?
Hey.
Jeez, that's loud. We just got to go home. Our text machine isn't working. That microphone doesn't work. That one buzzes. I need some Tylenol.
I can feel better. I can hear better, though.
I need some Tylenol. I got a headache.
You got a headache?
I got a headache. We did get everybody had that one, right? You made that too easy.
You made it too easy.
No, I didn't make it too easy. You're the one that said it was the child-proof protective thingy-dingy. So what happened 31 years ago in Chicago?
31 years ago, we had the Tylenol case with 7 deaths in the Chicago area, killing 7 folks. Still unsolved.
Yeah, but there was a guy arrested for something, though, right?
There was a guy, James W. Lewis, sent a letter to Johnson & Johnson demanding the company pay him $1 million to prevent further killings. He was then convicted of extortion and sent to prison for 10 years.
But he didn't really...
He was never tried, and...
They don't think he did it, huh?
No.
That case, to this day, remains one of the number one study cases on how companies handle a crisis, and I'm talking about not only the crisis of their product being manipulated with good, bad, or different, but also how you handle a crisis how you deal with consumer confidence going forward. To this day, Carnival Cruise Line should go hire whoever took over the Johnson & Johnson event and bring them out there, because I'm not getting my butt on a Carnival Cruise Line until they get. In fact, they should change their. They're at the point now they should change their name. I mean, it's just that bad. But how you deal with that kind of adversity was textbook. I mean, Johnson & Johnson's considered to be a masters at how they came out of that. And what came out of that? What came out of that is a whole new industry of how we deal with tamper-proof and all the other things that come on, which we all take for granted and just assume they all had a seal on them, years ago. So it was a fascinating case, unless of course your family was one of the 7 that was killed from the event. It's not so fascinating, but it was looking back 31 years later, it was quite an interesting tale. We got a bunch of Tylenol people. We didn't get anybody yet on the Obamacare, which surprises me and doesn't surprise me.
Right, based on the numbers you were reading, it doesn't surprise me.
So this is an opinion page, and this is an opinion page from Peggy Noonan, who is a Republican, leaning writer. She used to work for one of the administrations, and she was doing some interviewing, some discussing. This actually made me laugh out loud during the break. So this was a discussion on Fox Business Network with the founder of McAfee being the internet security. The founder of McAfee slammed the system's lack of security on Fox Business Network, calling it a hacker's happiest nocturnal fantasy. He predicted millions of identity thefts from this website. So not only is the website not stable in terms of it was crashing a lot, and I don't. Well, you would think they would have predicted that, but I get that. You get a whole bunch of rush traffic. Okay, we're having some problems with the first couple of days, but to have it to be unsecure, that is unacceptable. And so anyway, I go on. After the administration floated the fiction of the problem were due to heavy usage, the journal tracked down insurance and technology experts who said the real problems were inadequate coding and flaws in the architecture. Going on, there were no enrollments in Delaware in 3 days. North Carolina got 1 enrollee. In Kansas, there was unable to report a single enrollment. Louisiana officials told me 0 people enrolled, 8 the second day. So not exactly overwhelming people. Many of those who got into the system complained of sticker shock, high premiums, and high deductibles, and that is the feedback that I have seen, from just anecdotally from people online. But I'd love to hear from any of you who may have tried it, and particularly, I'll give you double winning if you tell me you signed up for it, and that's if you signed up for it and it's better, you had nothing or it's better for you. Awesome. I mean, that's if you had no health care and now you do, and that's a program that works for you. I want to find somebody who's a success story. I mean, we've had 6 trillion articles on this law, and we've shut down the government over it in part, and I'm we're all ad nauseum sick of it, of hearing about it. I'd like to have someone say, "Hey, raise your hand and say this worked out great for me. Awesome. I'll send you a round table and Jim Boys. I'll bring it to your house." So here's the how individuals can avoid penalties under the Affordable Care Act. Do any of the following apply to you? And I'll read these quickly. Second half hour of our show today, we're going to do some real estate talk, and we've got a gentleman from Calhaffa joining us too. Number 1, you're part of a religion opposed to accepting benefits from a health insurance policy. Which religion is that? I don't know that one. You're an undocumented immigrant. Okay, let me raise my hand for that.
Yes, right.
You're incarcerated. That would make you're already getting better health care than most people. You're a member of an American Indian tribe. You own a casino. You don't need it. Your family income is below the threshold for filing a tax return, which is $10,000 for an individual or $20,000 for a family. So you're not filing any return. By the way, that's a key point right there. I'll come back to that in a minute. You have to pay more than 8% of your income for health insurance after taking into account any employer contributions. So if those are yes to you, there's no penalty for lacking health insurance. Or if you're insured throughout the year through Medicare, Medicaid, TRICARE, the Veterans Health Program, a plan offered by your employer, insurance bought on your own that is at least a bronze level, or grandfathered health plan in which it existence before the health reform was enacted. So those are people who don't have to pay a penalty. The question from our phone screener there during the break was, okay, what if you don't sign up on the online, so that doesn't trigger a notice, and you don't have health care? How are they going to know? Who did they hire to enforce the health care provision?
The Internal Revenue Service.
The Income Reduction Service, yes. Now, temporarily, they're shut down. Double thumbs up. But the IRS is responsible for not only reducing your income from your taxes, they're now going to be responsible for verifying that you have insurance. And my guess is, I haven't seen, John, you were saying you had to check a box, but that seems a little too easy for me. I mean, can't you see them saying, hey, submit a copy of your...
Actually, you have to submit also a copy of, there's something you receive, and if it's either via your employer or via you getting the service through Obamacare, that you're going to submit with your tax return along with checking a box. When we had Don on from California Insurance Finders, he was giving us some information on that, and I know he's going crazy with all these shutdowns and different things, giving out quotes.
So you're going to submit evidence of your insurance, or the IRS will be after you for...
And your company will issue to employees a certificate saying that they have or don't have coverage.
Interesting. So there you go. And as we mentioned, no penalty in 13, 1% penalty next year. It goes all the way up to 2.5 points on your income. So it's just for round numbers, $100,000 income, that's $2,500 penalty for not having insurance or an insurance plan that they consider a bronze level or something that's qualified by them. So take that into consideration, if you will, and maybe we'll just keep the government shut down. I actually saw an article this morning that mentioned the president's plan, and I actually agreed with him.
No.
Yes.
Wow.
The GOP and the president were meeting last night. The Republicans offered to do a short deal that would give about a six-week reprieve. They could open the government back up, and the president said no. And I agree with him. No. 6 weeks is not. This has been going on for 6 years or 5 years. There hasn't been a budget. We cannot, and is anybody else just tired of this continual, this is an emergency, we have to put it off. I think the buck's got to stop here. There's a number here.
Yeah, if you look at everybody else with deadlines throughout their days, whether it's mowing the lawn for a neighborhood or getting a project completed or what have you, and we're all busting our tails, and we have something with the government come about that has a deadline, and we'll extend it. No big deal.
The government has piled up $17 trillion with a T, $trillion in debt, and $60 trillion more in unfunded spending promises. So do the math there. That's $77 trillion. I don't know how much money that is. I honestly do not know how much $77 trillion is. The problem is a staggering $250 billion per month. 80% of our spending goes on without any congressional control, which basically means it's funded, it's coming out, there's no way to cut it back. So we're only talking about, we can only really adjust the 20, and the things we've been talking about has been like 1% of the issue. And I don't know where the end is, and that's the part that I think that bothers me the most. I don't know where I don't know how you come to a conclusion. Maybe China will get in a fight with us, and we'll just say we're not paying you back. I'm not paying you back the money. That'll be a big portion of how much we owe. Some people too. I don't know what you do there, but it's
you're just waiting for them to jump across the desk and just start fighting.
Well, I think
fist fights.
I totally agree with you. I think just a total knockout, fight. I mean, punching would be a good start to getting
Kicking,
down.
slapping.
It's just, and you've seen some of the women and they can fight. I mean, they'll take old Boehner out, clean out. So we got to do this. We got some guests coming up. We got a couple of things to talk about. Let's take one more quick break. 339-1140, 1-800-920-1140. You can text us if you'd like at 441140. If you want to reply or if you want to win something, if you're texting us, you've got to give us your name and your phone number so we can call you back. So we'll do that. We'll take a quick break. This is Talkin' Money. John Fodorero, Jeff Tarbell. You want to do a quiz question real quick?
Yeah, let's do a quiz question real quick. Sarah Blakely.
Yep.
She was a fax machine saleswoman.
Not a lot of that anymore, is there?
13 years ago, selling fax machines. Today, youngest self-made female billionaire.
Selling fax machines? Wow.
Well, she's doing something a little different.
That is one heck of a machine.
What is her? How did she become a billionaire?
339-1140, 1-800-920-1140. You can text us at 441140 with your name and phone number if you want us to call you back. This is Talkin' Money. We're going to be
Right back.
Talking money.
And we're back to Talkin' Money. And here's Jeff Tarbell.
Right. I'm feeling skinnier already. 339-1140, 1-800-920-1140. You can text me at 441140 if you want.
That's just because you haven't had any donuts today.
That's true, and I'm wearing my Spanx.
Spanx.
They got a men's version of Spanx?
They do. They have come out in 2010 with a men's version of Spanx, some form-fitting undergarment wear.
You bike riders been wearing Spanx forever.
That's right.
I mean, that's all it is, right? Lycra.
And most people say it does not look attractive.
Well, you wear these under your gear for false advertising. So what was the answer? Sarah Blakely, or was that?
Yeah, Sarah Blakely. The answer is her company Spanx is now estimated to have she's now reached the Forbes $1 billion group.
Wow, 42 years old.
42 years old, started this company at 29 when she decided that her jeans were not fitting right. So she cut a pair of pantyhose, cut the feet out, and now the jeans laid much nicer.
And so that was the beginning of Spanx, huh?
That's right.
And Oprah helped her out, I think,
She did.
Get started a little bit
She
too.
did.
Let's switch gears here a little bit. Let's get on to some real estate, some finance, and some other related topics. We asked Evan from Cal HFA to give us a call this morning. Evan, are you there?
I'm here. How are you?
Good. How are you doing?
I'm doing just great. Thank you.
Good. Thanks for getting up on a Saturday, and so you don't work for the Fed, so you're still employed.
That's right. State government employees are still employed. So
that's right.
A good thing.
So you do well. I'll let you talk about Cal HFA. We've discussed it a little bit here in the past, but what is it that your agency does? Who benefits, and how do they benefit?
You bet. Well, California Housing Finance Agency, also known as Cal HFA, we've been in business for more than 30 years now, and we're a state government agency, and one of the primary things that we do is we offer loans to first-time home buyers. And because we're a government agency, we're able to offer things that not just anybody else can, things like zero interest, down payment assistance, 30-year fixed rate, FHA mortgages, and so forth. And, we've got good rates, and we've got great opportunities for first-time home buyers. So
this program is the one that we'll talk about that in conjunction with CHDAP. So how do those...
CHDAP, we're big on acronyms with the state.
Right.
CHDAP stands for California Home Buyer Down Payment Assistance Program. And that's one of our standby programs that has been popular for many, many years, and that's a deferred payment deferred payment program that is 3% of the purchase price. So you get that down payment assistance, but it's deferred, so you don't have to make payments on that until the home is sold or refinanced or paid in full. But then we also have a brand new program that we just introduced a couple of weeks ago, and that's a combination of a 30-year fixed FHA mortgage. We call it Cal Plus, and the plus part of it comes with the zero interest down payment. We call that ZIP, again with the acronyms, but ZIP stands for Zero Interest Program because this truly is zero interest down payment assistance, and then it's 3.5% of the first mortgage loan. But because it's deferred, once again, you don't even have to worry about that or make any payments until the home is sold, refinanced, or paid in full.
So why would you not use the Cal Plus program then?
There's no reason not to use the Cal Plus program. You definitely should use the Cal Plus, and you can actually layer it with the CHDAP. So you can get you could get 6% or more in deferred down payment assistance.
Evan, can you give us a description of a first-time home buyer?
You bet. A first-time home buyer does not necessarily mean someone who has never owned a home. It's just someone who has not owned and occupied their home in the last 3 years. And so according to our rules and a lot of others out there, that's how we define a first-time home buyer. And then some of the other eligibility requirements for our programs are we do have sales price limits, and they vary according to the county that the home buyer is in. The sales price limits in Sacramento area and the surrounding counties is about $535,000. So the home cannot be more than that. And then we have income limits as well, because our programs are designed for low and moderate income home buyers. And so the income limits in this area for a family of 4 is $87,450. So a family of 4 cannot have more than that as their household income.
Now, there's some programs that are limited to, like the LIFT program, which is limited to the city of Sacramento. So the CHDAP, the Down Payment Assistance, and the Cal Plus or the ZIP program, are any county or any city?
Any county, any place in California, literally. And then, if you're buying in some areas that are considered high cost, we give a little bit extra break. But they're available throughout the entire state of California.
And where does the money come from?
Well, we're the investor, and so it's kind of a nice little circle of funding. When the money comes in as mortgage payments, it's recycled back out again. And we work with lenders, so we work with approved lenders. We have about 50 or 60 approved lenders that are able to offer these programs to our first-time buyers. So we're not a direct lender.
Right. So our company, which is Comstock Mortgage, is approved to do those programs.
Yes, which we're very happy about.
Yeah. So so this differs from a bond program, because some of your bond programs have a forgiveness in there. Where
these are not bond programs.
Okay. So there is even though there's no payment due, there's a repayment due. Which means the loan does sit there. There's not a forgiveness element to it, correct?
No. Well, there is there's not a forgiveness on the down payment assistance. No, it's deferred, so you don't have to worry about paying it until you sell or refinance or pay in full. Correct.
Now, so let's look at this. Let's take a typical FHA transaction. If you have, just forget about everything, all the other programs. If you come in and do a typical FHA, you're looking at 3.5% down.
Right.
Now, we're doing one right now with a young couple, which we're going to use as kind of just a great sample program. They're going to buy a house for $175,000 in the North Highlands Antelope area.
Right.
So they're going to get the CHDAP 3% assistance, and they got a little assistance from the seller too. So in this instance, this young couple is going to get into the house for about $1,900.
Isn't that great?
Which is fun. Now, why would I? Because the Cal Plus is new to me. Why would I still be able to use the Cal Plus, or why would I not do that now?
Yeah, no, if you still can, if it's not too late, then I would want to use the Cal Plus just because it comes with that zero interest program for down payment assistance, which you can layer with the CHDAP.
So you could use one
even more.
You could use one or the other or both.
Correct. You can use one or the other or both. It's a great
and it's
program.
at 3.5% versus a 3% CHDAP, correct?
Yeah, so you can get up to 6.5% when you layer those two programs together.
So effectively, then you'll have a loan to value on paper of above 100%.
Yes, you would, and you can use some of that for closing costs also. But one of and I know some people think, oh, well, we shouldn't even have any 100% programs out there anymore. But one of the things that we're looking at now is because we've established some pretty high standards for our borrowers. Mm-hmm. We have a debt to income ratio of 43%, and so the borrower's debt cannot exceed 43% of their income, so they're not getting in over their head, especially for first-time homebuyers. And then we have a homebuyer education requirement, so they need to take 8 hours of homebuyer education with a financial literacy element in there as well. Because, studies have shown, statistics have proven that homebuyer education contributes to successful home ownership, and we're big supporters of that. So that's another requirement that we have of our borrowers, and then they do need to come in with some earnest money as well.
Yeah, so we haven't waived their requirement for needing, because you can't use those funds. You still need a 0.5% down, correct?
Yeah. Well, with FHA, I believe you do. Yes.
Right. Right. So and then conventional now, which is switching over to a 95% max loan next month. So, but anyway, it gives you, the hard part has always been getting on a lower end priced house lately has been getting the seller to contribute anything toward the closing fees, because there isn't a lot. I mean, let's just be honest, on a $200,000 house, there isn't a lot of money in there to begin with, and then there's a lot of competition for it. So if John makes an offer and says, "Hey, I'll just buy it as is," and I make an offer and say, "Well, I'm going to use CHDAP and I need another 2 or 3% from the seller on top of that," my offer's not as attractive.
Yeah.
So
we deal with that all the time, unfortunately.
But the ZIP program would give us another little pool of money to draw from, so maybe we don't have to ask the seller for some help.
Exactly, because I've heard the seller contributions are not what they used to be, right?
You're correct, and now but
as inventory increases, we're going to see this product come about more.
Well, and we're starting to see it now. We're starting to see houses. The prices are starting to get up a little bit, so some of the investors are looking around saying, that's not such a great all cash deal anymore, and and we're getting into the winter, and the houses are starting to sit a little bit. And like I mentioned, this young couple who we're gonna, I told him, I said, when this loan closes, I'm going to put you on a billboard on I-80 that says, hey, I mean, this whole process for them. I mean, the Evan's talking about the homebuyer education. They did that online. We have a Magic, which is one of the mortgage insurance companies, has a great online study program where they can do it.
Right.
And they were on it. They found a house. I mean, this whole thing, start to finish, from the day they walked in and met me for the first time to the day that loan closes, will be about 65 days, and that includes finding the darn house.
Yeah, that's awesome. So, are you finding that the investor purchases are coming down a little bit more, and there are more inventory out there for first-time buyers then?
Yeah, we're starting to see that, yes, and that's and there's still a lot of my clients that haven't found a house, obviously, but we're starting to see some indications, and some of the areas are better than others. I mean, Roseville and Rockland, and there's a lot of investors in there. You get some other areas that you have a little better shot. So,
yeah.
One quick question from the text line: does using ZIP make my mortgage insurance payment go away? The answer is no. Because FHA always has mortgage insurance no matter how much you put down, and conventional you'd have to have 20% down.
Exactly.
So if you put down 20% and use the ZIP, I guess you could do that. That's one quick question, Evan. We got about 30 seconds here. Do you have to show that you don't have any of your own funds in order to use these funds?
No, I don't believe so. That's a question that they could ask when they're talking to their lender, but I don't believe so.
Yeah. Okay. We'll cover that too. So if you're interested, Evan, we got to wrap it up for the day. Thank you so much, because the ZIP program is new to John and I. I mean that's new to everybody, I guess. So it's
it's brand new. It's not surprising that you guys haven't heard about it yet, because it's just out hot off the presses, but we are getting some reservations in for it, and we're really excited about it. So hopefully you guys can start using that with your first-time home buyers.
Very good. Enjoy your Saturday. Thank you so much.
You bet. Thank you.
Okay. Talk to you later.
Bye-bye.
If you'd like more information on that program or getting just pre-approved, this is the value of getting yourself pre-approved. You can find out what programs are available to you across the spectrum. And there might be stuff out there you've never even heard of and didn't even know was out there. And that's the beauty of coming to us. JohnFod.com, JeffTarbell.com if you want to find us during the week. You can catch this show and repeat on Facebook. We'll see you next week, everybody. Aloha.